8:30 beach time here in LA, where I'm at. Everybody there? Let's see. Dr. K, you there?
I'm here.
Okay, let's see what's going on here. Looks like everybody's there. Anyways, we deliberately chose this morning to have the webinar because we always know what days you're going to have some interesting action in the market, but actually that's not true. You can see here we have another gap down. So really you're in this zone right here around the 200-day moving average, and it's just really choppy. And the market direction model is in a neutral signal, and you know what? That's probably a good place for it to be because it's just really difficult to make any progress. You know, it starts to look like the market wants to go up. You know, if we switch here to a weekly chart on the NASDAQ, the thing to notice here, I'm going to make this real big, is that on the weekly ranges on the way up here, 1, 2, 3, 4 weeks up, you know, you close near the peaks every week. So it seems to be telling you that it wants to go higher, and it's possible it could just go sideways. But you can see you've got this big area of overhead here, and it's kind of working against that, and that, you know, that's a 200-day moving average here. So maybe the market just needs to chop around in here for a while as you work off some of this European news. But you know, things are getting worse over there, and with Italy, that's a much bigger situation than Greece by a long shot. And of course, you have the rest of the pigs behind it. So, you know, how do you know you don't wake up to a headline where the markets are down big like they were today? And that's pretty much the story. You know, we can come in long. The only stock we've been long here has been FIO, Fusion IO, and you know what? We're up a pinch on it right now. It's holding up above 35, the breakout level. But you know, you give back a good chunk of your gains in one morning when you see the big gap down. So you know, it's tough. But that's why the market direction model is in a neutral signal. I think you're kind of sitting here. If you're long a few things, you're taking smaller positions to account for the volatility and trying to sit but sticking to your stops. But I'm sure net, nobody's making any big progress. Anybody out there making any big money in this market? I haven't made a dime since I made a bunch of money shorting Green Mountain Coffee, and I'll get to that a little bit later since some of you asked about the mechanics of how I shorted that. And of course, I'll be my usual obnoxious self when we get to that. But in the meantime, you know, here's where the market's at. Dr. K, can you enlighten us with your PhD bestowed wisdom?
Well, despite the PhD, I think I have a few things to say. Actually, I'll start out with a couple people wanted to go over 1907 versus the market today because, well, we sent out a chart some time ago which showed how there's a similarity to 1907 versus the markets today in terms of the...
Oh, I don't think my e-signal goes back that far, Dr. K.
Well, the price volume does look deceptively similar. However, the times are quite different between now and back then. So we're generally very reluctant to assume that any pattern is going to trace out in a similar fashion, even though it has traced out so far in a similar manner. It's always best to focus on price volume action in major indices and leading stocks on a real-time basis. That's going to give you the day-to-day clues as to what you should do in terms of portfolio positioning. As an aside, as we wrote in the original report, I think we sent that out a couple months ago, 1906 had a horrible earthquake that led to the insurance claims in 1907. That created a massive burden to these insurance companies, and that set off the panic of 1907. Then the market recovered and enjoyed a bull market until the start of 1910, when another recession began and stayed till the end of 1911. So that's a very different situation than what we've got today. In August 2011, we had a big market downturn. Also, commodities had been selling off prior to that, and that could be that the market's telegraphing a global recession, since markets are forward-looking by 6 to 9 months. However, there's one spanner in the works, and that's quantitative easing. The QE factor seems to be pushing markets reluctantly higher, especially as true since October 4th. And this has been a junk off the bottom led rally, much like we saw in early 2000 and early and throughout much of 2009. The junk stocks are the ones that outperform. So we're seeing enough evidence that that's repeating again here. So it's very possible that all this QE out of Europe and of course the U.S. Is going to be powerful enough to create perhaps a sloppy uptrend.
Dr. K, is this the chart that you're talking about? The comparison? I'm not sure.
That's right.
Is this it?
That's exactly it. Yes.
Okay. Everybody can see that. Let's see. I don't know if I can make this thing bigger. Let's see. Resize it here. Bingo. Oops, close that. Open that up. Yeah, so people are asking, are you going to retrace? I really think, in my view, this is kind of a lame exercise to get into. And I know everybody loves to do it. And certain things do work out similarly. But you know what? You don't really need to be doing this, because all you really need to do is focus on the price volume action of what the market's doing right now, and not trying to use some previous period to forecast where we're going. Yeah, that could happen. Sure, the market could roll over from here. But is it just necessarily going to, because you have another period where that looks similar? I don't think so. Like Dr. K said, things are not exactly the same in terms of underlying conditions. So, on that basis, we just go with what the market's showing us here. And even today, we're showing some support off the lows, but we'll see how we close here. It does seem, though, that you may get some forced selling in the market, as the potential for Italy to start going down the tubes, and maybe a couple other countries, may create some liquidity issues out there that institutional investors are going to have to address by selling off assets. And I'm not sure whether that means stocks are coming down with it or not. The flip side of all this is, how are these people really going to deal with this problem? Can Greece really pay off their debt? And they're going to get further into debt in order to get them into a position where they're going to be able to pay off all the debt. Italy's going to do the same thing. Italy hasn't grown its economy for I don't know how many years now. So where is it going to find the economic growth to address the need to increase tax revenues and be able to pay off these debts? They can't. The math just doesn't add up. So what's going to happen is going to be QE, and that probably is where we're headed. And I think you're seeing that. Let's get rid of this. You're seeing this in the price of gold, obviously. Let's move these out of here. Got a weekly chart up here and bring up the daily here, and you can see this gold is moving up sharply. And we called the pocket pivot here. You had a nice pullback. If any of you guys remember, last week when we were doing the webinar, intraday gold was down and was pulling right in here, and I told you I thought it's a buy. Go back and look at the video. And I thought that pullback was very viable right there. You could have entered and had a nice move over the last 7 days, and it's continuing higher. You're well above the 50-day, moving through this area of resistance, but I'm going to guess that there isn't too much that's going to slow it down if you have the situation where the market's starting to realize that the only way out of this is to print, baby, print, and that's what they're going to do. And I think gold is telling you that. Gold is the most widely recognized alternative currency. Silver is not getting such a great play here, but it's trying to move higher, and I would watch it here through the 50-day. I know you have this black cross, but I don't know how these things work for commodities, and I don't look at patterns for stocks the same way I would necessarily the way I look at them in commodities, and I wouldn't look at them the same way as I do with stocks. So to me, it's not really the same thing. But I would watch for a move. You have this little consolidation. You see this little cup and handle type thing. I would watch for a move through the 50-day, and I've got an alert set there at 3407, which is where the 50-day is now, and looking for that thing to potentially pocket pivot through there. So you have to have higher volume than this day right here. And that volume is 36,621,558 shares on the SLV. So you're looking like you want to go higher. And so it's possible, if you're really adventurous here, you could buy a position in the SLV here, anticipating this, using the low of today as a quick stop. That's the type of thing that I might do. 33.33 puts you 40 cents lower, so you're not taking a lot of risk, about a little over 1%. And you can come in and test that. And I think that that's very playable here, anticipating a pocket pivot through here. So that's the type of thing I would do, given that I like to play huge positions. I want to be long a lot of this if I want to go into it, not some wimpy little 10% position. But in any case, these are the best trades that we can see. Dr. K, is that your take, that in the market here, the best things that we've seen trending over the last 3 weeks really have just been the precious metals? Anything else?
Nothing on my radar in terms of going long.
Yeah, so that's kind of where we're staying. We've got And we talked about this. We have a position in field, but you're buying this breakout. You know, and this thing was funky last Thursday, I think it was, when it came out with earnings on Wednesday afternoon. The stock gapped up to around 37, came all the way back down just above the 30 level. Looked like it was going to blow it. Turns around, and it goes from a viable gap up to a pocket pivot type move. It's very jagged in here. And I think you know, the pullbacks down in 34, 35 are very viable if you think the market is going to be okay. For me, this is a little bit tricky because you can buy it here. You know, you're looking good, looking like you might hold up because you closed off the lows yesterday, and then today you gap down. It's a little bit difficult. So are you making that progress? Probably not here, but could you later on? Possibly. These guys are going to do a $100 million secondary offering they just filed for. That's one of the reasons it was down today. But you can see it's rallying back up nicely in the face of that news and also in the face of a big market sell-off. I think Fusion.io is one stock to be keeping an eye on if and when we ever get into a nicely trending upside bull run here. I think this stock is very compelling in terms of the fundamentals, and we like it as far as the technical actions so far. But remember, this got to keep in mind this is straight up off the bottom, so it probably needs to build a handle. So maybe not is not the time. The line of least resistance will break or be broken eventually, and that's where we want to be coming in. So
there have been a few stocks that you know, just a smattering, but you have to be very careful on the long side or the short side in this kind of market. You know, PCLN, you know, PCLN is looking pretty good in the sense that it might be on the verge of completing its base. If the market's going to drift higher here on QE, even if it's a sloppy drift higher, stocks like PCLN can potentially outperform. You know, of course, there's HANS, HANS. That still has a very high relative strength and tends to want to go higher. You know, ARM. There's a few out there. GNC was another one that's recently hit new highs. So you know, there's a few, and they are actionable, but on the basis that either you don't have a whole lot of exposure to the market at this point, because I certainly would not be on margin on the long side in this environment. I would be pyramiding in slowly into winning positions.
Assuming there are any winning positions to pyramid into. But Priceline, interesting. And you know, I talked about this, having 3 waves down in the pattern. You can see how that pretty much at this point it looks to me like it's all sold out. And so once you can't break down below the 50 or the 200-day moving average, it breaks out again. And here we go again. Not out to new highs yet, though, I might add. So we'll see where this goes. If the market rolls over and starts a new down leg from here, which is always a possibility, so you don't really want to get yourself locked in anything. That's why the market direction model is in a neutral position right now, because there's nothing to really get locked into one way or the other. So I think you will see a lot of these big stocks roll over, and so I'm still watching Amazon here. You know, it still hasn't gotten to the 50-day. Is it shortable? Is it going to break down and test the 200-day moving average? I think it will if the market rolls over. Apple, there was some news today that they're telling their component suppliers to chill out, and they're not going to be ordering so much because they're not selling as many iPhone S's, 4S's as they thought, I guess. And so what you're watching for here is a breach of the 50-day moving average, because this could bust to the downside. But, you know, look at the movement even in Apple here. You have little gap downs and gap ups. It makes it very difficult to deal with either way if you're trying to short it. Look at Baidu. I thought Baidu was real exciting. A couple of big gap ups and a couple of big gap downs. They're kind of settle in here. Don't really know where this is going right now, so it's kind of unclear to me. We can look around. Let's look at some of the names you guys have been mentioning. You keep in mind something I know a lot of people like to ask us about names that we're not even looking at, and if we don't really have anything to say about them, it's probably not much to think about them. If you're looking for some assessment of a stock that's going to soothe your nerves, I think that's kind of pointless too. Hey, Dr. K, here's a good question for you. Regarding the market direction model performance, which numbers are used to calculate P&L when the reports are sent out? Pre-market, such as the last signal?
Right. Consistently, we've always taken the prior day's close if the signal comes after the close. And what we found is the gains, if the market gaps up the next day or gaps down, you're going to have a positive or negative bias to the model. whether or not the model is issues a buy signal or a sell signal. And we find those positive and negative biases tend to wash out over time. But in this very choppy gap up, gap down environment, we had two signals that occurred back to back where the market gapped up, then gapped down. So that created pronounced bias. And so what we've decided going forward is if the model issues a signal shortly after the close, within, say, the next 2 or 3 hours after the close, we'll take the closing price of that day. Because in all likelihood, the futures are probably going to be trading pretty close to where they closed. And with ETFs as liquid as they are, most brokerage services allow for after-hours trading, usually 2 or 3 hours after the close. Now, if the model issues a signal before the next day's open, say by 2 or 3 hours, on the flip side, then we're going to take that opening day's price. And I think what this will serve to minimize the choppiness of the bias, especially in a market like the one we're in.
Let's see, looking at some names here. SWI, SolarWinds. You know, people ask us about us, but can I ask you a question? What is it we're supposed to tell you? Stock's up today, the market's down. To sell it all and take a profit. To, you know, if I had a position, I'd probably be sitting with it and see how it holds up here if it's up. But I'm not quite sure what people want us to tell you. Yes, you're right. It's going to 100, and you're going to make tons of money. Don't ever sell it. Starbucks acting pretty well. Nice pullback. You had a pocket pivot coming up through here. This is a nice gap up. It's acting okay. There's nothing wrong there. So is it viable? I guess it's viable. You can use the standard 7-8% stop, but you know, you got to ask yourself, is the market really in a position here where you're going to make a lot of money? But yeah, you could buy some. You could buy some Lulu too if you wanted to. It's pulling back, holding the 50-day. You had a couple of pocket pivots in here. One here actually on this kind of gap up, pulls back, but it's not really going anywhere. But it's acting okay. Will the MDM state it specifically that when the window of opportunity is wide open? So what are we going to do? Add a gauge now that tells you how wide the window of opportunity is? Dr. K, you want to comment on that?
Yeah, it's really, in practice, it's really nearly impossible to know that when the model issues a signal, it's quite impossible to know how long that signal will persist. In other words, trying to say, okay, this trend's going to go for a month or 3 months, it's impossible. I've never known anyone to be able to do that. And I think it just adds noise. It adds noise and confusion to one's focus to try to anticipate something like that. Because also keep in mind, if you're labeling a signal in terms of, okay, this signal is a very strong signal because we feel the window is open, well, that might be a very mistaken feeling because a lot of things can happen on a day-to-day basis that close the window. I think that the most reliable indicator in terms of actual investing in one's account, and one I've always used, is as new stocks emerge and issue buy points, I will buy into them. And if I find myself on margin, that's the best indicator that the window has opened. Now, I don't know how long the window is going to stay open, but if enough stocks are in my portfolio and in very pronounced times, I'll be fully margined. I'll be 200% long, such as in late 2006. And I went 200% long very quickly in a matter of days. And that did tell me, okay, this is a very important point in the market where the window is clearly open. I don't know how long it's going to stay open, but all those getting on 200% margin came a number of days after my market direction model issued a buy signal. So in other words, when MDM issued a buy, I had no idea how powerful it would be. Several days later, I find myself 200% on margin. That's a pretty good indication that the window's open. But again, by then, you don't want to be starting to buy, or you don't want to be starting to use the MDM as, okay, let's go ahead and buy.
MDMA? Did you just say MDMA?
Yeah, we were talking about brain.
Watch out those London parties you're going to, buddy.
Oh no, actually, if anyone here has talked about heard of brainwave entrainment, it's using binaural beat frequencies, and we're talking about how MDMA can artificially induce that. So that was, I think, was on my mind.
All right, well, I thought that was interesting. Freudian slip there, Dr. K, but
yeah, pretty funny. Well, if anyone out there has used this stuff for brainwave entrainment, be curious.
yeah, too bad we don't have my trader Bill Griffith here to do his Mr. Mackey from South Park imitation about doing drugs. Okay. Anyways, that's a nice little sideline there. Anyways, what Dr. K is saying is, how's the best way to know when the window's open? The market is a feedback system, okay? The market tells you things every day. If it's telling you that you're buying stocks and you're not making any money, then it's telling you you're in a mushy environment, okay? If you buy stocks and you're up right away, usually the way I know that things are really hopping for me is I'll buy something, and the way I buy stocks, I'm getting some love right away from the position, and it's moving for me. So let's look at when does a window of opportunity open up pretty wide here. Well, when we got the August 2nd sell signal, it broke down. But did you know right away? No, the market broke down very sharply, but the very next day it almost looked like you're getting a reversal day on heavier volume. Look at this volume right here. Right on this day here, and it looks like it's going to reverse back to the upside. But does it? No. And so you don't really know at the time, but probably if you hit this thing in a couple of days, you're getting some really nice feedback from the market, and so it's telling you that, yes, this position is working, this market move here is working for you, you are seeing a window open very wide for you. So that's really how you determine it. There's nothing, people are always, and this is such a massive psychological flaw on the part of many investors and new investors, that everybody wants to approach the market as if there's some way to determine certainty. So there's no uncertainty. You're going to be 100% right every time. There are magic methods. Someone's asking, what's the best way to average up on gold? Well, you buy more at a certain price. A lot of times we'll just set 10% upside moves in gold. So let's see. And I don't know, Dr. K, have we hit another one yet?
We're on the verge of hitting the second pyramid point here.
Yeah, so that's how we're doing it. You up 10%, we're just adding another bit to the position. So I think it's in 10 or 20% increments, but that's how we'll handle it. There is no best way. There just is a way to do it in a manner that uses positive feedback from the market to reinforce the decision. So as long as gold acts well here, I think it's looking okay.
Yeah, with individual stocks, you could actually use pocket pivots and things like that as your pyramid points. And in fact, that would be my preference often with stocks. But I find that with these precious metals, there's so much noise that can occur that can vary the price. So you're not often going to get the pocket pivots you'd like. And therefore, if these things go on a nice trend, you want to just be using price as your add point.
Yeah, and so my point here is that people always want a certainty, so they want to know when the window is wide open so they can mortgage their home and put everything in. Is ACAM and F5 still doggy? Well, we haven't seen any buy points in them. Why would you buy them? They're trying to come up through bases, but there aren't any real buy points showing up in them. They're dogs. Would not mess with those stocks. Somebody's asking about Aurora. I think AutoZone's probably the better one, but it's acting okay too, just moving along its 10-day moving average. And AutoZone's acting well too. There's Advanced Auto Parts, another one. So this group is acting okay, and so that means O'Reilly or LY is acting okay as well. Dr. K, have you done any work on O'Neill's work on holding a 20% winner for an additional 8 weeks? You don't hold it for an additional 8 weeks. You actually, the rule is if you have a stock that goes up 20% or more within 2 to 3 weeks, you have to hold it for 8 weeks, not an additional 8 weeks. But Dr. K, what's your take on that rule? And then I'll give my take.
I've never used it in my own trading, just simply because the reason Bill created that rule was back in the early 60s, he sold a couple stocks out too soon that showed a lot of price strength to capture the profits, and he realized what a mistake that was in terms of all the profit left on the table. So he created that rule that would force him to stay in a position if it was showing strength. I don't know if he really utilizes that rule, in this last 10 years, because you can have something that shows a lot of price strength in the first 3 weeks, and then the market can also, just drop dead. So you don't want to be holding that position for, an additional five weeks.
No, and that rule is kind of one of those rules that's based on almost no statistical sample size that would make it really statistically significant. So
It's our publicist calling.
it's not.
I'll just let it ring.
Okay, you need to get a louder phone. I don't think that ring is loud enough. But in any case, that rule is not one that we use. You're better off just using our rules, the 10-day. Here's another question. If we're sitting without a goal at GLD2, we wait for a pullback or okay to get in now. You should have bought on the first buy point. So if you didn't buy, now you want to buy because you see it up. You're going to have to wait for the next buy point, which maybe is a pocket pivot somewhere. Would you use a 10-day as a sell guide tomorrow for FIO if it breaks today's intra-low, as long as it is within the 7-8% guideline? Well, it hasn't been shown a tendency to follow the 10-day moving average. So, has it been following it for 7 weeks? Not quite. But it's still, I wouldn't, the 10 days probably, I would use the top of the base, 34.35, it should hold the top of this base. That's what I would be using. 10-day might be too slow. You could use it if you want to, but it doesn't guarantee that it's going to necessarily work or be a fail-safe point, So again, someone that looking for certainty with some magic rule. I realize it must be frustrating for you to both be educating in this environment with a novice like me, but I appreciate your thoughtfulness and patience. Thank you. You're welcome, but I don't know how thoughtful or patient we really are. Do you see a scenario that brings silver back to the April highs? Well, I think the continuous movement higher in gold will drag silver higher. So, somebody asking, GIS consolidating, well, good candidate. General Mills? No, I wouldn't buy General Mills. Why would I buy it? It's just a big defensive food stock. Ulta has been good. We talked about that one. They've had some pocket pivot. It's holding up, but you had this nice breakout and not having any big progress since that breakout. But it may just go sideways. Same thing with Under Armour. It's another one doing the same thing. I like this question. I want to know what love is. Love is when a stock, you buy a stock and it goes up a lot. Or if you short a stock like Green Mountain and it goes down a lot, that's showing you inverse love. So let's see, going through some more questions. A lot of questions about FIO. It's still, it's holding the breakout, so it's okay, but I think you're going to have to get through this secondary offering. Also, if the market stays funky, you're not going to really see too much upside. Keep in mind, though, you came straight up off the bottom, so is it likely to just keep launching to the upside? I think it needs to consolidate here for a little while. That's my thinking. So I'm not really gonna get big in here. Our screens are picking up this one today. I know we get emails from people. I guess you guys think that we don't have screening ability or something in the market, but it's kind of showing a pocket pivot. These guys make these displays that are supposed to be very exciting. Came out with earnings today. It's stalling. Do I buy this? I don't know. Maybe it's one to put on your watch list. If it's acting good. Hey, Dr. K, somebody who heard your phone says it's the ravers calling. They want their MDMA back.
Well, they're going to just have to wait because the doctor is in.
Yes, the doctor's in. Let's get back to more gold. People ask about the GDX. The miners are okay, but they're stocks, so to me they get sold off if the market gets sold off. We did like the gold. I think gold looks pretty good. It's the most fundamentally, the strongest one fundamentally as far as I'm concerned. But you can see institutions will go after Newmont. That's the institutional favorite. So if the institutions think that they have to be weighted in gold stocks, then they will buy Newmont. That's the one they always go for. Having worked at O'Neill, you get a sense of where institutions will go when they think they need to be in a certain sector. Newmont is definitely, you know, the big stock in the gold area, and it's coming out of. Let's see if I can find a weekly chart here. Where did my weekly chart go? Oh, is that it? Yeah, there we go. The thing is, whoops. The thing that's interesting about Newmont, lost them again, is you are coming out of this pretty long pattern here. So you're breaking out of this big cup and handle type thing. You're making new highs, so that looks pretty good. The last time gold stocks had huge moves was back in 2003 when Newmont had this move. But they don't tend to have these big moves. The biggest move I've ever seen in history occurred in 1987, and you saw American Barrick, which was an IPO back then, a new issue, relatively new issue, and you saw Newmont go nuts on the upside. But you don't usually see the gold stocks have big moves. But these look pretty nice right now, so I'm not going to tell you that they don't look good, but they are stocks, and if we get into a forced selling type situation, you know, stocks can come down just like everything else, and it seems like the way to buy these things is always buying them on weakness, because look at gold tries to break out here, Randgold tries to break out here on this weekly chart, and you know, fails, and here it is again, so I wouldn't be surprised if it jacked back to the inside. But you know, I think the market's going to close lower today. We'll see if I'm right. I do think you probably have some forced selling that's going to have to go on, and I think it's making people a lot more nervous, waiting to see how many more dominoes fall in Europe. So I'm just watching the indexes trade. The Dow's off 214, about 1.7%. Nasdaq's off over 2%, down 58.85, along with the S&P, which is down 2%. So, you know, volume's very heavy today. I wouldn't surprise me to see the market go lower, because of the position you're in too. You know, you come straight up here. You could pull back. You could retrace half of this normally. So it really depends on what you're seeing here. So it'll be interesting to see what kind of signal we get from the market direction model in the coming days. I'm going to go back to looking at some stocks. So,
well, that's if we get one at all in the coming days, because actually, the way the market's acting right now, it's very much like post May 2010, post the flash crash, where the model sensed there was a lot of trendlessness, a lot of noise, and so it opted to generally stay in cash. That's why you can go back to that and see that the model would have normally issued lots of signals during that choppy period, but it refrained. I think it only issued maybe a couple signals, and then it did so on the basis that the risk was very small, typically less than 1%. So in other words, it could get its feet wet. If it was wrong, it would only lose a fraction of a percent. And that's why it was able to hold its own very well post the flash crash. Right now, we're kind of in that phase, so the model is going to have to see more evidence on in terms of buying or selling pressure before it switches signals. That's my guess right now.
Yeah. People asking about Netflix. Joe, you're absolutely right. This is a good illustration of love. And love is when you get a gap down, breakout on a stock like Netflix, breaking down. I'm going to get rid of these. All right, where's my daily chart? When Netflix gaps down through the neckline in this head and shoulders, and it's going down like that, that's love. So when you're heavy that, you know that you're on the right side of that one. I'm watching Netflix now. If you look at the weekly chart, you're just getting this lane bounce. It's coming up into the lower part of this chart, or this base here on the chart. Again, this is a weekly chart, so moving up towards the 100 level on a dead cat bounce. But it looks like I can see Netflix going a lot lower. And I could see it eventually getting down below this low in this base, down below 40 bucks. I can see that happening. How long it's going to take is another story. But it stays on my short sale watch list, as does Green Mountain, because Green Mountain really broke down from this head and shoulders here. It's the left shoulder. Let me make this bigger. But you can see the left shoulder, the head, and the big breakdown. That's the right side of the head here, and then you have a little right shoulder, and you're shorting this right, and we put this out right along the 50-day moving average. And now you have this big bounce up into the bottom of this area. See this? So you're running up into this resistance on the upside, and roughly the 10-day, or I'm sorry, this would be the 20-day moving average here is coming down on top, and that seems to be an area of resistance on the upside for Green Mountain. Now they came out with earnings after the close today, I believe, so I wouldn't be surprised if you see another breakdown on earnings. Certainly if it rallied up in the 78 area, up into the 200-day or the 40-week moving average up here, I'd be all over that thing probably on the short side. It depends on how much volume you see coming into it at that point. But this really has been one of the easiest trades to make, and people ask me to go through how I handled it. There's really not much to it. You know, I know you guys probably want me to say, oh, you know, I shorted here, and then when it started to come down 5%, I added 3% to my position, and then when it rallied back 7%, I wasn't stopped out, so I added 2.5% of my position. As it rolled over again with volume up 35%, I added another 3.8% to my position. I know that's probably what some of you want to hear, but it really isn't like that. It's kind of like this. I go short 100% here, 100% position short here on this day. Next day, the stock takes a little higher. I cover. It's up at the peak, starts to roll over. I go short again. It starts to break down. It runs back up. I cover, and I short again, and it blows apart. And I got really short on this day right here, and it blows apart the next day. Breaks down. It undercuts this low, so I'm covering the position. And remember, I got 150% position at this point. And when it breaks down here, I'm looking for it to rally. And so you do get this little rally, but it takes you right up close into this area here, up in the 85 area. And intraday on this day, I could feel that this thing wasn't really getting any juice behind it. So I just came in and hit it again. And by the end of the day, we're blowing down through the 200-day moving average. Now that I think is, that might be when someone else came out and said, well, sure, I don't know if that was Einhorn. Einhorn started this first move here. But I'm basically covering on this undercut and then watching. You know, that's kind of a judgment call. You can kind of feel it in intraday that it's going to break down again. But it doesn't mean you're necessarily going to hit it right. But I'm just coming in with 100, 150% position every time I'm coming in. And if it does start to break, I might get a little more aggressive and go to a 200% position. Remember, intraday I can use 400% buying power if I want to. Then when it breaks down in here, it rallies up into the 200-day one time. I hit a position here again, and it broke down, covered, and I haven't really been messing with it other than going long here for a quick little trade that made a few bucks, but not much else. Now you're going back and forth. I'd love to see it rally up in here again. It may not. You may actually see it blow to the downside on earnings today. Who knows? But am I going to try and play it at this point? I don't know. I got this move. If it starts to gap down again, maybe I'd be shorting it again, or maybe I'll be watching it after hours. For those of you who like to live dangerously, maybe you buy puts on the stock going into earnings. But, you know, I had suggested buying puts on Baidu possibly, you know, up in here into earnings, and that didn't work out so well. So not a guarantee necessarily that that's what's going to happen. But I do think Green Mountain is probably headed lower. But with a lot of the other coffee stocks like Starbucks acting well, you're even seeing this Java Holdings is trying to come around. You know, you have a little pocket pivot here, but it's a junky little stock, and it's not really doing. I think Pete also is holding in the base, you know. So I don't know. We'll see what happens here. I'm actually more interested on the short side, and I have positions out on them today, Apple and Amazon, because I think if the market's going to break down, they're going to take these down, and they're the ones that look to me like they might be in sell signals on the basis of 2 weeks down and 1 week up on Apple. Okay, and 2 weeks down and 2 weeks up on Amazon. And so I'm operating on the basis that these are topping signals. What will force me to admit that I'm wrong is if the market turns around and goes higher, and Apple actually is able to push off the 50-day moving average. You know, so far it's holding the 50-day moving average, but if it's able to push off and break up to this range, I might get stopped out. But I'm actually looking for these trades. I'll come in and ding them every day when I think the market's getting weak, and if they go through the high of the day, I just cover them and go away. And I've done that a couple of times. They start to look like they're going to work, you know, because I've been dinging Apple a little bit here up in this area, and when it breaks down, it bounces off the 50-day and it doesn't really go anywhere for me. But I'm watching this. If it breaks the 50-day moving average, then my thinking is you're heading for the 200-day at least. And it would be a major top in a big stock. That would also tell you something about what's going on with the general market. And so, you know, the flip side of this is if you want to short Apple and Amazon, then just go long the SQQQ, and I guess you could do that too. But I'm keeping an eye on those because I think that if you do see Apple break down, if you do see Amazon break down, it's going to be a signal that we're heading lower in the market, and we're going to start a move to the downside. How far that goes, who knows? We could just be in a big choppy environment for the rest of the year. So somebody's asking about the follow the stock. We're not doing anything with follow the stock because this really is not an environment, we think, for novice investors who are just trying to build a simple portfolio that they can steadily add to positions in the right spots and go off to their day job and feel comfortable. I don't think that's the type of the market, that we're looking at right now. So Portfolio Simulator dude is on vacation until further notice, and we're not going to get in there and start messing around with trades, so you can all see how many times I flip 100% position during the day before I figure out which way it's going. That'll just confuse you even more. Is LinkedIn dead? Well, I'd say that it's coming down, so I don't know if it's dead. It's just in this big range now. You had 3 pocket pivots in here, one here, one here, and one here, and I think this shows you that pocket pivots aren't the panacea. They are a tool to be used along with proper risk implementation of risk parameters. You know, where are you going to bail out on this thing if you're wrong? My view is if I buy a pocket pivot like this, if this thing can't hold up and move up the next day, I'm gone. Tried picking up some LinkedIn in here on this day. You had a nice reversal in here. I was actually long a small position on earnings, and it broke down, but I ended up blowing out at about 82 and change, so I'd actually come in around 80, around the same price the day before. So I didn't get hurt. I thought you might have a shakeout and a breakout, but I think the killer here for Netflix in the short term is it's a $500 million shelf offering that they're shelf filing to offer common stock. They're going to proceed with 100 million of it, so that'll be priced soon. I would watch and see how this acts, but I think LinkedIn is a stock to keep an eye on as well. You know, just building a big base. You know, go back and look at, I remember Baidu when they came public, and it took Baidu a long time before anything really happened. They came public, had a big up day. I actually remember the day they came public because I was in Maui at the time, and Bill O'Neill called me up. For those of you who are in Hawaii, if there are any of you out there on the Hawaiian Islands, you know, the market opens there at 3:30, and I kind of like it because you get up at 3:30, trade until 10, and then go lay at the pool for the rest of the day. But I remember Baidu going public when I was in Maui at the time, and of course that was its biggest move, and that was the end of it. And it took about a year to form a base and come out again. And even then, when it broke out, it was a little dicey. It pulled all the way back in. This is a weekly chart also, keep in mind. So this pullback was sustained over several weeks. You came to the top of this, and then this move here, you just blew out of there. And this is kind of like a short stroke pattern, a cup with no handle, I guess, or maybe a 1 week handle if you want to count this as a handle, a 1 week high handle. It doesn't really matter. I think you could have bought it on the basis of, let's go back. You know, these are things to watch for. You could have bought Baidu. Let's see. Okay, this is. So I can get this right. Here's where he came public. You could have been buying somewhere in here on these pocket pivots. You know, here's a buyable gap, and that works for a while, but then it doesn't. But you know, so watch for something like that in LinkedIn. Maybe it takes some time, like Baidu, after coming public, to build a base, you know, and that's what I would be keeping an eye on right now. So I don't think it's dead. I just think it's something you want to keep in mind. Love is when your significant other is willing to do all the things they did before marriage. No, love is when your significant other is willing to do even more things than they did before you got married. How's that? Somebody asks, what's the nifty graphic package you're using? It's this is just Easy Signal. The difference is I'm on a different computer, and it has bigger screen, so you're getting more of a horizontal view here. What would you do with GLD if the market tanks? I mean, we're just holding it. Our sell point. What's our sell point on the GLD, Dr. K?
Well, basically we have a couple options here. Since we have a small position, I would say we should be very flexible and allow it to run into the 200-day if things got really rough. And a break through the 200-day would be the point of no return. That would be your absolute worst sell point. In practice, of course, we may end up selling it well before it would get down to that level. But keep in mind also that it might take weeks for it to run into its 200-day, and the 200-day is on an upward slant. So it might run into its 200-day, say, at a price of 165 a couple months from now. That's assuming that it's not moving around and moving to new highs to continue this long-term uptrend that started in 2001.
Somebody's asking us. Oh, we got someone in Oahu. All right. Um, somebody's asking. Let's see here. I just called LinkedIn Netflix. Oops, could have been a Freudian slip, but I don't think so. Do you think 2011 is the most challenging year? I think the whole decade of 2000 to now has been the most challenging decade compared to the trending market that we played in the 1990s. And it says here, yeah, you guys are up 50% plus. Actually, a little less than that. We dropped 7% in October because of a couple of signals where we got hit. So we lose money sometimes too, but not a big deal. We're still up very nicely for the year. We're not really worried about it. We just take the signals as they come. So, but still, I think to be up, even if you're up 25, 30%, even 20% in this environment, I think you're doing pretty well. I do use candlestick charts, but not a lot. It's Dr. K. What is the mood in London pertaining to the Eurozone debt dilemma?
Well, I'd say the mood here is generally on the negative. I mean, the consumer confidence in the U.S. has been plummeting, and I'd have to say the same thing over here. There's common talk about how bad the economy is over here, and this is in London too. So outside of London, I would imagine the talk is even more pronounced, and there's not a lot of confidence that things are heading in the right direction, especially when the neighbors over here, in the form of the pigs, Portugal and Greece and Spain and whatnot, are having so much trouble. So there is certainly a loss of confidence among people on this side of the pond.
In the United States, everybody's pretty clueless, so everybody still thinks Obama is a wonderful president, the smartest president we've ever had. I kind of think that's a contradiction in terms, but that's just my own view. But I notice Americans in general seem to be pretty clueless about the whole debt crisis and what it really means. So they don't worry about Italy, they don't worry about Greece. They hear about it, but I don't really think it figures into their day-to-day lives, especially down here on the beach. But in any case, summing up what we're talking about here, this is a market with no love. So some of you may remember the Doobie Brothers song, Without Love, Where Would You Be Now? Well, without love, this is the kind of market you're in where you're chopping and slopping and nothing goes up for you. But the only thing that's showing us any love right now is the GLD position that we have, the gold position we have bought here. And it's acting very nicely. So we're going to stay with that until it doesn't work. On the short side, you know what I'm looking at. I'm looking at Amazon and I'm looking at Apple as potential shorts if the market starts to break down, because I think they are in sell signals with the 2 down and 2 up on Amazon, 2 down and 1 up on Apple. That's an O'Neill rule. But, if you think about it logically, that sort of action, what is it exactly? It's sort of subtle distribution. Stock gets whacked on huge volume. Okay, there's Apple getting whacked on huge volume. And notice the rally overall, not as many upside volume spikes, but it is persistent. But it's showing you a stock that's in a position where it could run into some trouble, and it's a little bit erratic, wide and loose, and you're not seeing a strong action coming up on the upside. Same thing with Amazon. And the beauty about Amazon, it's already below its 50-day moving average, so it is in position. You can use that 223 as a stop. That's only about 5% higher. So, but I would use the tops here around 220, the peak here. You can't see it, but the 65-day exponential moving average runs right through here. So I would use that if I'm going to try shorting. But the other option is to simply wait for the market direction model to give you a signal. So that's all we're doing right now. We're long gold and some silver, more gold and silver, and coming in and trying to work the short side if that's what we're going to get. But I don't really see a lot here. Watch the short sale setups, emails. We'll see if anything comes out. I'm screening for setups right now. We'll just kind of see where this pans out. But right now it's a very tough environment, so there's really no reason to get too aggressive either way unless you're a maniac like me, and I only do that in one of my trading accounts, and I have several. So that's really where we're at right now. And we'll see you guys next week. We're actually going to be going to Vegas on Wednesday, so we'll do one more webinar on Tuesday from Playa del Rey. Dr. K actually is coming home finally, and we'll both be here, I believe, on next Tuesday, so watch for that. We'll see if anything else comes up in between. But it's kind of an environment where we feel like, should we do another webinar or should I do a GoView webinar? But I feel like a lot of it is already embedded in what we're talking about. The market direction model is in a neutral signal, so it's telling you that we're really not in a fat spot here. We can test some positions either way, but are we making any progress on the long side? No. Are we making any progress on the short side? No. But could we? If the market rolls over from here, you're in a logical position for it to peak out and start to roll over, maybe get a 50% retracement. Is that a playable move on the downside? It might be. So I'm kind of watching for that. But, this is where I'm sticking right now. So far, I got a little bit of downside movement in these, a couple of bucks on these, but nothing more on Apple and Amazon short. But like I said, you can just wait for the market direction model to give you a sell signal and then go with it at that point. That's probably going to be your best bet. Anyways, that's all I got.
Breaks to the downside can occur very quickly, as we all know. So that's why it's always important that even if you don't have any skin in the game and you're completely in cash, it always pays to always watch the market on a day-to-day basis. It doesn't take that much time, just to make sure you can see what the market's serving up. And I know that in the past, when I would be in cash and the markets would get very dull or let's say very unpredictable, sometimes I'd take my eye off the ball, and then the next thing I know, I missed a great breakout from a stock or potential downside in the markets.
Yeah.
So it pays to be disciplined, to just even set aside 15 minutes a day just to watch what the price volume action delivered up for that day.
Yeah, it's really just a matter of wanting to be in touch with the market and being alert and being vigilant for an opportunity to pop up, and at the same time sitting on your hands and not doing anything so you get in trouble. So you watch all those pretty flashing lights up there, and you might start doing things that you shouldn't do. But I think you're Dr. Katie right. Just kind of hang back, be alert, be vigilant, be watching, and when you start to see emails coming from us, you'll know something is up.
Yeah, I just got an email about something earlier in the broadcast on brain wave entrainment. So I'm going to answer it now, just because I'm probably going to get a bunch of emails on this. Brain wave entrainment is about binaural.
The restroom real quick.
Okay, binaural beat frequencies, and this is something that's been discovered for many decades ago. But what they've been able to do is package binaural beat frequencies in the form of MP3s. So when you listen to them with headphones, it entrains your brain into a certain state. So you can have an alpha state, which is a state of relaxed creativity and mental awareness and mental focus. Or you could have a theta state, which is sleep-inducing, especially for those with insomnia or with hyperactive minds when they're trying to get to sleep. And then there's many variations in between. So the idea is to utilize this technology so you can optimize a specific brain state you wish to achieve. I've been using these tools for quite some time, and so the topic was are there faster ways or more pronounced ways? And I know that there are certain substances that Aldous Huxley used for brain exploration that he writes about in one of his books. And some other writers as well, and that led to the subject also of ecstasy, where psychologists were using MDMA to enhance and repair relationships between people. So it's an interesting field that's pretty much been quashed because of the legal system, which, of course, these are Class 1 substances. So obviously all experimentation came to a halt. But it'd be interesting to know from people who actually have done and experimented in this area, if they found this area, of great import in their own lives. Of course, the downside to ecstasy, MDMA, is very pronounced, so it's not something that I would want to do, and I don't recommend other people do it. But if they have, I'd be curious in knowing how it's made their mindset enhanced in this brain entrainment way.
All right, thank you for that, Dr. K. Very interesting stuff. Kind of a weird sideline, but anyways, we'll be in Las Vegas next Wednesday, you guys, and we're staying for a couple days presenting on Thursday. We're doing a 1-hour free presentation on market context. A lot of you have probably seen that already. I think it's the same one we did the other night. But we'll also be showing some current market things as well. And then on Friday, we have the big 4-hour intensive workshop, which is also going to be combined with watching the market, since it is going to be during market hours on Friday. So any of you able to come out, we hope you're able to join us. And we're happy to talk with you guys during the workshops and right afterwards, and hope to see a number of you there. And on that note, we'll see where this market goes. But like I said, I think it's going lower today. I think we were down 244 on the Dow. My call is we close lower than this. We'll see if that happens. All right, everyone, take care. Goodbye.
So long, everybody.